Good afternoon, good evening, depending on where in that 24-hour time zone everyone's joining us from. um, it wasn't so long ago that Fausto and I were actually sharing a podcast, hosting a podcast together, talking about some of the things that I'm going to show you today that have panned out very nicely since we last spoke, Fausto. And what a great event to be finishing the year off on. Uh, as Fausto said, we've been around for a while. We've been doing this since 2007. That's when we were founded, and it is based off of the things I'm going to show you today are the same, some of the very same foundations I've been talking about since day one. uh, but before we get into that real quickly, this is for educational purposes only, not a recommendation to buy or sell any security discussed. Acorn Wealth is not a registered financial advisor in jurisdictional province. Always be aware of the risks of trading and of course, speak to a financial advisor before taking any action. Any stocks discussed, certainly towards the end, I've got some setups we're going to go over, maybe being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth. But once again, there's no guarantees with any investment, not stocks, not real estate, not anything. So always be aware of the risks and past returns discussed, not guarantee future results. So diving into things, I'm sure you've heard many of the great speakers over the last few days talk about different topics, market concerns, inflation, rate hikes. It's been a year of headlines, but that is no different than any other year. We have seen, certainly, if you've been in the market the last 5 years, it's been full of volatility, and that's what we as traders and even as investors like. That's how we make money. Buy low, sell high, short high, buy back at lows. I remember once saying back in 2008, in our first year when the market did crash, and I said, well, isn't it strange how everyone's fearing this crash, whereas, who doesn't want to buy their favorite stocks for 5 cents on the dollar, and then do it all over again? Go back up to $1, sell them there, buy them back at 5 cents. I mean, what a great way to make money. So I guess what we've got to just take into put under our belt is the concept that markets will crash. There will always be more crashes, and there will also always be more rallies. We've just got to have that way of being able to welcome the volatility, and if we can harness it, of course, there's a lot of opportunity to be had. And I think we're going into another one of those same periods. And so just to kind of take a look at some of the types of setups that I love to trade, and some of the ones I'll be showing you today. Things like LUNR, if you're kind of part of our watch list that we've been sending out over these last few months. LUNR or Luna was a great example of one of these setups that we had dropped a long way from its highs down to $3, and we kind of first alerted it there on $3.50. We sent another alert out around, as you can see this time, it's about $5, I believe, or just above $4.50. Said, hey, this is going to the moon, we think. They were awarded a massive contract by NASA, and I think the last speaker was talking about breakouts, if I caught the end of her talk correctly. We love breakouts, and this is exactly the kind of thing that we saw on Luna. So, this very, very well-poised stock for potentially explosive moves, and off it went all the way up to $16. I'm out of it now, but something that we will be watching again in the new year for a potential new entry signal. But I feel like whenever you've got a move of that size of 3 to 15 or 5 to 15, depending on when one traded it, it's there's nothing wrong with taking some profits when you're going into the end of a year and a new market cycle beginning in January. So it's just, and there's the kind of a bit of a look at it there. But these are the types of things I love to buy, I love to invest in, I love to trade, is looking for stocks that are entering a new upward cycle. And we're going to talk a lot about that today. So obviously, just to kick things off, if we start with the question of what has the market been doing this year, right? if anyone asks you that question of what's the market doing today, what's the market doing this month, the way that most people would respond to that, and the way that a lot of analysts do, is to look at price movement. You know, oh, the market's up, or the market's down. Well, that can be quite a misleading statement, right? That can be quite misleading. I'll give you an example. In the first 6 months of this year, this was up to September, so a little bit before the beginning of the year, but basically we look at that kind of first 6 month chunk. If you looked at the market's performance based on price, yeah, it was certainly a bullish move. You know, market price was going straight up. But where was that movement coming from? It wasn't a broad spread rally. It was actually uh, uh, concentrated very much so into utilities, which were up 18% over that period, real estate up 14.9, and financial services up 10, and every other sector, the 8 other of 11 sectors, underperformed that movement. You had basic materials, energy, communication, industrials, consumer defense, and so then you're going into the red, right? Industrials, consumer defensive, cyclicals, technology, and healthcare, all actually down. So, I mean, if you were saying, "Hey, what's the market doing? The market's bullish." Okay, well, I'll just go out in there and start buying any old stock and throwing darts at the dartboard. Well, there's a very good chance you may have ended up losing money despite the market going up. And I think that can sometimes be quite uh, a frustrating experience for many traders. If you take a look at what the market's doing now, as an example, let's just take a look at uh, the S&P currently. What's the S&P currently doing? Well, you would say that, okay, 1, 2, 3, 4, 5, 6, 7, over the last 7 days, right, pretty much since the beginning of the December, the market's been going sideways. But once again, has it? Is that true? Well, let's scrape beneath the surface, because we all know that the S&P is a bit of a distorted way to look at what the market's really doing. It considers some stocks to be more important than others. So if by the market you mean what's Microsoft doing, well, okay, maybe the S&P is a good reflection of that. But if by the S&P we want to look at, what all of the stocks in the market are doing, it's a bit of a distorted view, because it weights those heaviest, largest companies like Microsoft and Google, the Magnificent Seven, as more important than the other 443. So let's switch from the S&P to what I call the real S&P. RSP is the symbol. So RSP is the same exact stocks in the S&P 500, but instead of saying, hey, Microsoft and those other Magnificent Seven, they account for 20% of the market's value. Instead of doing that, it says, okay, all stocks in the S&P are considered equal. So let's actually see what all 500 stocks in the S&P are doing if we give them an equal vote, right? And this is one of the lessons I was taught very early on in my days, even before Acorn. So back in 2002, 2003, one of my mentors said, Johnny, it's not a stock market. It's a market of individual stocks. And so being able to look at where the strengths and weaknesses in the market are and what's actually going on is very, very valuable. It's a powerful insight. So does everyone see what I'm showing you on the screen? If we look at the real S&P, or RSP, which is an equally weighted ETF version of the S&P 500, what's the market actually been doing since the beginning of December? What's it actually been doing? It's been going down, right? We've been going and making lower highs and lower lows on every single day. So this is, uh, if you ask me what the market's been doing in December, I wouldn't say it's been going sideways at all. I'd actually say that we are in a bearish pullback. The market topped at the beginning of the month, and we are in a bearish pullback for the overall S&P. So it's just a different way of looking at things, and I wanted to introduce that kind of idea because I think it's a fascinating study of the kind of public view of the market versus the data behind it that I think tells a much more important truth. So what do we do about that? Well, what I did about that at the beginning of the month is I liquidated about 70% of my longs, and the longs that I held on to were the ones that were quite special. And that's what we're going to talk about. What makes something very special and what some of those ones that we've been holding are. So this leads into the next topic. So when we talk about what's the market doing, one way is to talk about performance. But as we just detailed, one example of how just talking about performance only can be misleading. So what I think is a very important combination is to look at what the market's been doing, and then added to that, what is the smart money doing behind the scenes? So when we look at that kind of 6-month performance that we saw in that 6-month chunk of the year of 2024, and we saw that, hey, real estate was and utilities and financials were the sectors that did so much better than so many other areas in the market. Real estate was actually one of our favorite setups earlier this year. It was one of the sectors that I was at least most heavily invested in. It was one we talked about repeatedly in many public events like this back in January and April, saying prepare for real estate because we think it's going to be the top sector. And that's more important, isn't it? It's not what you can see in hindsight. It's can you anticipate it? Can you predict it? And so for those of you that were in those sessions back then, you may recall me talking a lot about real estate at the beginning of the year. And this is why. So what we're looking at here is we're looking at a chart of insider buying. We're looking at how many insiders are buying versus how many insiders are selling in the real estate sector. And so the green line represents the ratio, the buy to sell ratio. And so in simple man's language, when that green bar spikes up, it means we've got high conviction buying. We've got a lot more insiders loading up on their own stocks versus ones that are selling. And this is a valuable insight. So if we take a look at the way this spiked back here in 2015, this is going all the way back till then, you'll see that that bar really, really shoots up right there. We got that green circle. Now, was that a good time to buy? Yes, absolutely. The blue line is the price, the performance, right? What's price doing of the sector? So we see price shooting down, but as that bottom occurred, as price was diving, that's when insiders bought the most. That's when we had that heaviest level of insider buying versus selling ratio go back the buyer's way. And that was the bottom. And then it happened again in 2016, going into 2017. We saw that next big spike. And was that a bottom you'd want to buy? Absolutely. And then we saw another bottom occur there at the beginning of 2019. And that was absolutely a great buying opportunity. We saw it again in 2020. In fact, that was at that point the largest spike of buying versus selling that we'd seen, and that was almost bang on the bottom of the market crash of 2020, which was one of our other proud moments to have warned people about at the end of 2019. We called that crash following some of these very same data points I'm sharing with you now. That's another conversation, though. But in all of these events, you can see that price was going down when the heaviest amount of conviction stepped in. And so what happened then over on the right-hand side is what developed into our favorite pick of 2024 at the beginning of the year. And because what we saw was, from a smart money perspective, even though price on real estate was going down, and so from a price or performance standpoint, if you were looking at that on its own, you'd think, gee, that's the worst sector. That's one to stay away from. It's going straight down while others are going up. Well, if you combine smart money with performance, you can actually see that something very special was going on. Whereas price went lower, we actually had, for the first time in this 10-year period, the insider buying versus selling shoot up higher and higher and higher. In fact, it was probably the first time in recorded history that I've seen where we had 1, 2, 3, 4, 5, 6, 7 sharp peaks, compared to, in all those other events, it was only really one. All right? Does that make sense, everybody? And the peaks were getting higher and higher, in coming to a point where it actually matched that level of conviction that we had only previously seen after the 2020 crash. Now, this is where it gets even better. I think you also heard the previous speaker mention divergence. Well, this is exactly what this is. When you're seeing price go down, where retail traders are selling shares and prices dropping, but in fact, smart money is loading up at heavier and heavier and heavier levels the lower it goes. And that is divergence at its best. Price and smart money divergence. And so this is why this became our favorite area of the market for the beginning of this year. And so it was then a matter of just picking an entry point. And so if you take a look at the sector, you'll see that in late December 2023, it began consolidating downwards in what we call a downward channel, which is a bullish pattern. It anticipates that if the pattern does what it normally does, this is set to break out to the upside. And sure enough, in April, it bottomed and continued on a monster rally. Okay. So how do we trade it? Well, you could have bought the ETF. You could have just bought the ETF, which is just a way of getting exposure to the entire sector, not picking any individual stock. Or you could have gone with an individual stock. And that's what I went with. My largest position this year, except for more recently, was in IGR. And I went in heavy on this one because it had all of these qualities in a top sector, in great technicals. And what made this special is it didn't just have all these qualities, but it also paid I think it was at the time something around close to 20% dividend. 20% dividend, which it did not cancel. And that would have been the biggest concern. It would have been saying, well, what if they did change it? Because dividends can be changed or cancelled. They can be lowered or raised, but they're not guaranteed. So if you're buying a stock which has a 20% dividend, you would be thinking, gosh, will that sustain itself? And so we looked back at all of these periods in the past and said, well, what did they do in the 2020 crash? Did they cancel the dividends then? No. Okay. What about in the 2022 crash? Did they change or lower or cancel the dividends then? No. What about in 2008? No. So every time we've seen these major market breakdowns, and some of these, of course, specifically in things that affect real estate, right? Like the global financial crisis. In the worst market crashes that you would assume would have the most potential direct impact on their ability to pay dividends to their shareholders, they did not change them. And so while that still doesn't guarantee they won't in the future, that is a way that by using some, I think, quite simple logic, we're able to read into the probability and the quality that this setup provided. So rather than getting caught up in reading company financials and diving into analysis paralysis, does everyone see? Put a one in the chat box if this whole idea makes sense, right? And you can understand that the thought process there. So what could be coming next, right? Well, again, you can see that I really place a lot of value in what the smart money is doing. Institutions and insiders. Because, and you've probably, if you've been around the block over the last 17 years that Acorn's been doing this, we have been talking about the same stuff since day one, right? As Fausto said, we've been around together a long time. There's a lot of, YouTube things and little mini courses here and there you see popping up all the time on the internet. But I mean, guys like Fausto, myself, we've been doing this for a long time now, 17 years in the business. And since day one, we've been talking about these concepts right now because they work, right? You don't need to keep recreating the wheel, despite the fact that we kind of, as people, as traders, we want to always get the new, bright, shiny object. But sometimes it's the tried and true methods that have been used for decades that still keep bringing in the bacon. And insiders is one of them, right? Because they know about, they are the ultimate expert. They know about new product launches, mergers and acquisitions, and so many other things that you would have to, you just wouldn't have the capability to have the same level of knowledge or insight that they do. They are the ultimate experts, and that's why so much research has been done on what an edge they give, right? That you can reap by imitating insiders exceptional profits, said Wharton School of Business, University of Michigan, Harvard and Columbia, Wall Street Journal. There's been lots of reports on what does Peter Lynch say? There's no better tip-off to the probable success of the stock. But for anyone who's used insiders before, it's not just about blindly following any time insiders buy or sell, but it's using that as part of the recipe. Much like, and this is going back to one of my first lessons I ever taught in 2007. Think of it this way: could you bake a cake without sugar? No, not easily. It wouldn't be a great birthday cake. But could you bake a cake with sugar alone? No. So while it is a incredibly valuable ingredient, it can't be the only ingredient. It's about, and that's why they call it a recipe. Each part plays its role in creating a masterpiece. And done correctly, when I find a masterpiece setup like IGR or like some of the others I'll show you, it's a game changer for me because it completely changes the way the confidence that I take into a trade. If I'm concerned about the market overall, which I am at the moment, it's why I sold a lot of my stocks at the beginning of last week. Stocks that were just trades, stocks that did not have the special recipe. Those ones I got out of because the broader market is down. Most stocks in the market are down since December 1st, as we've just talked about. So which ones do I hold? The ones that have this kind of special ingredients, because these are the ones that I feel are unique. And this is something that I spoke about, in fact, at the beginning of last year with Kevin Harrington from Shark Tank. We sat down for a 15-minute interview when he asked me to come down to Tampa, Florida, and talk about smart money. And I won't play the full interview here, but one of the things that he said about halfway in is he said, you talked a lot about strategy, John, but what is your smart money strategy? And I talked about this importance of combining patterns and insiders. And what I was surprised to hear him, well, not so surprised, but certainly humbled to hear him say was that following the insiders was one of his favorite strategies and that he used it himself. And he went on to tell me about how they sometimes, when they're loading up, or in other cases where they're dumping stock, could be not so rosy about the outlook of the company. It was a fascinating time, and one of the moments in our 17-year career that really just reaffirmed everything that I already knew, that we're teaching the things that people really need to be knowing, things that can help you, especially when you've got a billionaire like market savant like Kevin Harrington, talking about him being one of his favorite strategies also. And you don't have to look far to see the ripples of how effective this has been in the past, right? Think about other times of peak fear. Think about $0 oil. Right? Who missed $0 oil? Put a 1 in the chat box if you missed it and kind of kick yourself thinking back on that. A lot of people did. A lot of people did. And I often wonder why, because that is what we as a company are always endeavoring to help people with. Why did people miss such great opportunities? How can we help them to not miss the next one? Why did someone make such a terrible mistake in holding that stock too long, or whatever the case may be? And how do we help people avoid doing that again? That's what we design everything we do around, is how we can bring the most value and impact and help to people's self-managed trading and investing. Sabina, love it. That's exactly what I think it is for most people. Sabina says, we didn't know how to take advantage of the zero oil opportunity. So if you don't have the tools and the structure in place, then you are only left to emotional decisions. And I know firsthand, having been through that it's paralyzing. You don't know what to do. And some people stick their head in the sand. Some people blindly buy things and get lucky, right? But the way that we would go about this, and what we went and did was, as soon as oil was $0, we went in and scanned for stocks with great patterns that had major insider buying. Now, not any kind of insider buying. It couldn't have been a day before oil crashed. Even a day before oil crashed, even if that was just 1 week ago, let's say the insiders bought $1 billion worth, that doesn't matter, because they bought before the crash. In fact, I would completely ignore that, because clearly they didn't see it coming. I'm looking for the insight. I'm looking to piggyback the insight of the insiders that bought after the crash. Because even if that's just 1 day later, it tells a very different story, doesn't it? It tells us the story of insiders that after oil hits $0, they say, you know what? This is a great opportunity to load up on my own company. It tells me that it's very unlikely that they just went into a board meeting and discussed that if oil stayed low, that the company would be in real trouble. It suggests much more likely that this is one of the diamonds in the rough that can withstand those types of drops. And insiders are buying for one reason and one reason only. that they see a great, great opportunity. And so that's what we scanned for. That combination. The context is important. And in this situation, this was a stock we had never even looked at before. It was off the radar, and about 8 insiders were buying, and they weren't just buying; they were buying at levels of 216% more. So if they had $10,000 of stock, they were adding 216% more, another 21,000 bucks. 120% more, 50% more, all the way up to 982% more. And were they right? They were. Good for them, right? And this was publicly reported information. It's not like they were hiding it. They were reporting it to the market, and anyone who was looking in the right place could have found this information too, right? And that went from 92 cents, where we'd alerted it at, up to a peak of 470%. Now, you may not have held it all the way to the top. You may have sold it halfway. And that's okay too, right? 230%, still pretty damn good. Even a third of that is pretty damn good. A lot better than missing it altogether. And we saw the same with Callan Petroleum, 3 insiders, $3 million worth of buying. Perhaps a better known, more recognizable name. That had a terrific run from where they loaded up at. Another one we alerted. And the one that I actually bought, the first one I bought was CDEV, because I like the more speculative setups. They're not for everybody. In fact, we alerted it 1, 2, 3, 4 times. And the first time of which was at 33 cents. This stock was down from, I think, $33+. So it might have been a cheap stock, but it wasn't a penny stock. I always like to say I don't buy penny stocks. I like to buy $50 companies for when they're down at $1. So this was one of those special situations. In fact, despite lower prices, it was actually the one that attracted the most amount of insider buying. It was the one that had fell the furthest. But was the company about to go bankrupt? Well, I don't know. The vice president, director, CFO, and 2 10% insiders were all buying as much as $20 million. And that had the biggest rally. So there's always trades that suit different types of investment profiles. But my point is in these situations, that being able to have your finger on the pulse, not by watching 20 hours of news every day, and not by looking at thousands of stocks every day in your scans. The opportunities often come from being able to capitalize quickly when windows of opportunities open. And this first part of today has been hopefully my way of being able to teach the concept, because I believe we're on the cusp of another very similar type opportunity. And that is the energy and AI boom. So I want to move on to that. Does the theory we've covered so far make sense? Right, looking at oil, looking at the insights, looking at real estate, looking at these past scenarios where we've been able to act before and find great opportunity or avoid major risk. Because this ties into the next part of today, where I feel there is a major opportunity here that could be just as big as the internet boom, if not bigger. And this is actually one of the things I spoke about with Fausto back about 3-4 months ago on the podcast, was energy. And when we were chatting, I was saying, hey, look, I think that energy has bottomed. September 16th was actually when we published our first video that we sent out to 33,000 people in our community. And we said, energy looks like it has bottomed, for very much the same reason we thought real estate had bottomed back in April, because we were in a downward channel, and this was bouncing the third time off support. very much the same pattern as what I showed you earlier. If I can just quickly just rewind back to that. There you go. Downward channel, bounced 1, 2, 3 times off the bottom. That's usually when it ends. It's usually the bottom of that downward channel system. And so we saw that exact same phenomena going on in real estate. That's the real estate, sorry, the energy ETF. And that was the bottom. That it rallied sharply from there. And we did indeed take a position in XLE, the energy ETF. In fact, I still hold a longer term position in that. And our first target on this was to rally up to around $95. And so when it hit 95, we have already sold our trade position, about half of our overall position at that level, holding the investment long-term position and looking for a entry on that shorter term strategy, looking for a new entry point on this. But before we go into that, let's talk about why energy and what the bigger story really is. Because when we looked at the levels of insider buying happening on energy, on the sector, what do you notice about those green bars? And by the way, I should mention these green bars are also taking out a lot of the noise, things like, options exercising, derivatives, all those kinds of things, which is all noise. It's just focusing on when someone goes and takes a bunch of cash and buys a bunch of their own stock, right? Far more meaningful. What you can see here is those green bars just keep getting higher and higher, which means we are seeing a spike and an accumulation in insider buying in the energy sector. And so I thought, okay, well, that could be a fun trade. We could maybe hold that for a few weeks and do some energy plays. All right, great. But then I started thinking about, and it was really this mass accumulation from the seen in any other sector since real estate. I started thinking, what's the reason for it? Because if you were looking in the news, energy had been going down at that point. There was no major driver I could see other than geopolitical conflicts, which happen all the time. Why now? Why such heavy levels of buying? And it wasn't until I watched an interview with the former CEO of Google, Eric Schmidt, that my light bulb, so to speak, went off, lit up. And that's the AI surge. As we go into this AI new world, whether you are for it, against it, whether you're excited by it or terrified by it, it's almost impossible to get away from. Much like, trying to get off email or not have a cell phone is almost impossible to do because everything, including your banks, governments, everyone verifies things by text and email. Same the way that AI is slowly becoming integrated into absolutely everything that we do. And so one of the things that Eric Schmidt said, which is in this interview to Stanford Tech students many months ago, was he said, I want you to think about the infrastructure needed to power AI. It is immense and will only grow as these systems become more advanced, as we go towards intelligence and things like that. He said the amount of power and infrastructure is going to be huge. So energy will be the foundation of all technological advancement. That was one of the quotes. And I thought that was fascinating. I started doing some research. And it turned out that in 2023, right, Google is what it says at the top. You can see it's a bit cut off there, but Google and Microsoft now consume more electricity than 100 countries. Google on its own, or Microsoft on its own, consumed 24 terawatt hours of energy. And for 99% of you, that doesn't mean much. Didn't mean much to me when I read it. I had to look up how much energy is that? uh, you know, and it's a lot. It's more than what Iceland uses in a year, just one of those companies. Now, that amount of energy that they're using was before AI really started surging, right? Last year, people were using ChatGPT to tell a joke. Uh, it's starting to become a lot more serious now. It's in all of the new iPhones. It's in Google. Microsoft Windows has been replaced with Copilot, which is an AI-driven assistant that does so very much. Microsoft has been just rolling out more and more AI-driven tools. It is everywhere, and we are just getting started, right? And why that's so significant is if this is how much power Google and Microsoft used last year, that's just scraping the surface of what could be around the corner. I was told, and the research I was doing suggested that when you search using ChatGPT or Copilot or any of these, Microsoft or Amazon or all these different products that are coming out, one search, guess how much more energy they estimate it consumes than a traditional Google search or a Yahoo search or a Bing search. Guess how much more energy they estimate it consumes? 30 times. So if everyone starts using this, that's a 30 times multiple estimate of how much more energy is being used. So this is only expected to be much, much, much larger. And so one of the other things that Eric Schmidt talked about was it's not just the energy to power this, but it's going to be the infrastructure, the batteries just to run the systems, the 5G networks to transfer the data. The lithium batteries behind some of those data storage centers. It's more than just the traditional oil energy argument. It certainly plays a part, but it's a big, big, big theme. And if you want to think about now that we're past the presidential election, if whoever controls the energy controls the data, how important do you think the AI race is to win for the US? How important do you think the AI race is to win for China? Talking about like two of the biggest superpowers in the world. Think about back in the Apollo mission, where it was a race to the moon. This is a race to the top in terms of AI. And I think that it's one of the most important races of all, at the top of political agendas for the US, China, and other superpowers. So it is a race to be the leading energy producer in what we're talking about here. That's why you've seen nuclear power plants get reactivated that had been shut down many years ago. It was a 3 Mile Island and things. So this is not just a few month trade for me at all. This is something that I believe is going to be a major theme with major opportunities all through 2025 and beyond. And so this is where I felt very privileged to be very well prepared for. Because I've always been fascinated in AI long before Will Smith's movie with the robots. I've always been fascinated by it. So when ChatGPT 1 came out, we got heavy into it. It's probably about where I've spent about 50% of my time for the last 2, 3 years. We are a top tier developer with OpenAI. We just got released the Sora technology a few days ago as one of the first adopters. We're I think we're the second highest level developer with OpenAI that you can get to. We spend a lot of money on this stuff and a lot of time, and uh, so it is a great thrill today to share in the rewards of that with you. What we have been able to release just a month or so ago was our Smart Surge Energy Report. And what makes this incredibly unique is that this is the first of its type that is powered through the AI engine that we've developed, leveraging this technology. Because, as Eric Schmidt said in his interview, this is a consistently developing theme, and the opportunities are enormous if you get them right. And so, what this requires to take advantage of this opportunity is be looking in all the right areas and understanding kind of the context of what's going on. And so, what our Smart Surge Energy Report does is I've programmed close to about 10 years of manual research that I've done over the last decade, programmed that in to create an AI version of me that's better, right? A completely rule-driven AI intelligence that's going to scan and search for the types of ideas like we saw in the $0 energy drop or the 2020 post-crisis. Scan and look for those ideas. But what it does is it's focusing on anything related to AI, the AI energy surge. It's looking at who the insiders are that are buying the stocks, what their track record's like, how relevant to the story are they? If they're buying $1 million worth of shares, how much money do they have? Right, a billionaire like Zuckerberg buying $1 million worth of stock means nothing. Someone who makes $300,000 a year buying $1 million of stock means a lot more. Are they buying 1% more shares? Or are they buying 900% more shares? That would also be meaningful. What's that track record? When they buy and sell historically, in other companies they're involved with, did they make money? Did they sell at the top? Those are invaluable too. What's the company's exposure to the AI race? What are their political ties? What's in the news recently? It's going through a level of research that I would typically have to do manually, and I would probably spend a good 2 to 3 hours per company to do that. So if you're looking at 10 companies, 10 ideas, that's 30 hours of research. It's just impossible to be doing that on every stock every week. It's impossible until now, right? So this is what it's doing is it's running these scans that I've had to have done manually, looking for these setups and running through a series of 8 different tests it does on every single stock, and it then publishes its 5 favorite ideas from a risk reward standpoint and exposure to the upside. So, I mean, it's been incredible. It's been where I've had about 80% of my money in since we released this about 6 weeks ago. And I'll show you some of these setups. I think we've got 9 minutes left. I'll show you some of these setups here in a second, but that's what you'll get access to, is this AI energy report and these 5 ideas that fit into this, what we feel is the biggest theme since the AI, or the internet boom. And you'll get access to that for a full 12 months and for only $297. So it is something we're extremely excited about, and for $297 for full 12 months, it's an early Christmas gift to you all. So that's not all. I do have some other bonuses here for you, but I want to show you some of these setups as well. So once again, the AI Energy Surge Report is a full 12 months access of these monthly reports. Uh, but on top of that, you're also going to be getting uh, an extra bonus of 3 months access to our twice weekly live member events. So every Tuesday and Thursday at 4 p.m. Pacific, 7 p.m. Eastern, we also then go through all of these ideas that have been found by the AI engine, and go through the details of the technicals and why we like them so much. Obviously, we'll be talking about other things outside of just the AI surge, like the overall market conditions, Forex and commodities, all things that any trader and investor would want to be aware of uh, every Tuesday, Thursday. We also record those and send them out to you in case you're in a different time zone or can't attend live, but those are excellent. So that's one bonus for everyone getting started today. So you get 3 months access to those live Tuesday, Thursday sessions. We've also published some additional, on top of the energy report, we've also been using the AI engine that is, it's pretty special. This is something I've been working on, gosh, well, 2 years is when I started working on it, but for the last 6 months, as things started to really get exciting and we saw the quality of what it was finding for us, we put every other project that I was working on hold. Just came to a complete stop and devoted every single ounce of time and energy I had into this, because we wanted to be the first. We wanted to be ahead of everyone else in the market on this, and we didn't want to miss a moment of the opportunity. So we've been putting it to work in areas like lithium. So when you get so as part of this offer, we're also going to include the reports that have already been published, so you can go back and see like what actually happened here. It picked out some of these lithium stocks like Lithium Americas, which it identified as a long at $3.23, I think it was. We followed, because it does actually also give an entry point, suggested exit points, where support is and stop losses could be placed. We took that trade, and there's the screenshot from Interactive Brokers, selling it as it hit the target of $4.97. You can see it ran up, and there's a few different sells, $233 at 341, 340, 378, 483, 483, 488, 491, 406, all the way up to 506. So we were able to pick up roughly $4,000 or $5,000 on that one on LAC alone as it ran into its respective targets. That was a great move, and one that we'll continue to watch for a potential re-entry. But as you can see, that was the highest it ever got, $5 and change. We also had, if you were with me in one of my public events about 6 weeks ago, when we've only talked about this a handful of times. About 6 weeks ago, I said, hey, here's another example of a stock that I think that our AI Surge report alerted to us in October. And again, in the November report, November-December report. So this was one that, again, very uniquely positioned in the AI surge theme, and one that we had, it had alerted around $9.50, and we went and bought the call options on that one. The call options on that one. Now, I won't dive into all the details of option trading. We don't have time. But obviously, the benefit of that is risk management. And something like this, if it reaches its target of 390 by the end of next year, could be something where we're investing $1,000 and stand to possibly make $20, $30, $40,000 off of it. The risk stays the same, 1,000, because we're buying calls. So the risk is 100%, but the upside could be many thousands of percent. So that's a strategy I like to utilize in longer term plays, so I don't have to worry about constantly updating stop losses and market volatility. But CRK has been absolutely great. Obviously, we talked earlier about the market being soft and that most stocks in the market are actually going down. Not CRK. In fact, CRK just had another beautiful leg up. It was up 10% yesterday and up another 4% today. And I mean, that's one play. If you'd taken that where the AI, 12 months of the AI service would have paid for itself many, many, many times over. ASAN was another one from the surge report from November 27th. We alerted $15 December call options on that. Bought them myself. I think we made roughly $7,000 or $8,000 off of that in a week and a half. ASAN also, of course, being one of the major tech plays. Dustin Moskovich, the ex-founder of PayPal, one of the founders of that company, we'll be talking more about that setup next week, actually. CMRS, I think, was it CMRS or CRMS? They're all the very, very similar symbols. CR something. Anyway, there's been a whole bunch of setups that are looking extremely good. And one of the benefits that you're going to be getting with this program, I think we've got a minute left here. Yeah, there you go. There was CRK. One of the other bonuses that we're going to be giving you is that a very special watch list that we're getting sent out at the end of November. So it's still a lot of great ideas on here that have all been popping from that watch list. I think we've had 30% of them do over 30% rallies in the last 2 weeks, which is incredible. And some of them are just getting started now. So we've packed this full of value. And with these watch lists that we've included, there's a video taking you through our favorite setups. And of course, the AI surge report breaking down each and every one of them and why and how they fit into the major themes we see coming in 2025. So the very, very special. And the types of stocks it screens is anything in the US as well as global markets. It's also looking in Canada, looking at setups in Australia. In fact, some of the lithium players we alerted are Australian stocks. Some of the renewable energies are focused in Canada. And that's one of the benefits of it. It's looking in areas that you just humanly wouldn't be able to do yourself or might not even think to be looking in. So it's quite special. And the amount of time it's saved me is enormous. And I think that the last 6 weeks holding the setups that it alerted have been 6 of the best weeks this year that I personally had anyway. So, I mean, that was the one I was thinking of, CRMT. That was another one that it had picked out. So, I mean, enjoy the report, Sabina says. Yeah. We had CRMT, we had ASAN. So CRMT was up 50%. ASAN was up significantly more if you're in the options. We had CRNC, which was picked out in the end of November report. I had a huge rally. CRNT, I told you the symbols were similar. This is a 5G network play, which of course plays a very important role in the infrastructure the Trump government will likely be spending on. Certainly plays a critical play in AI and technology boom. This was another one from the end of November report, which you'll see and get access to instantly today. And that's, again, that's had a move from 317 to 5, almost 100%. I mean, it's been, and some of these, by the way, I still hold, just full disclosure. I can't remember which because their symbols are also similar. Some I've taken profit on, but just gives you a sample of the excitement behind this and the immense value. So once again, all of that is included for 12 months. And as well as the bonus reports, the lithium report, and 3 months access to our live member sessions every Tuesday, Thursday at 4 p.m. Pacific. So Sabina says, Thank you. Making money on NFE. Yep, that was another one of our signals. There you go, NFE. One of our members in the room commenting. Yep, NFE was also another one of our favorite setups from end of November. And that one also up from $9.70 to $13, $14, about 40, 50% on that one as well. And that's got a lot more potential gas in it. You'll see a lot of analysis on that in the reports you'll get access to today. So there you go. So we tried to make it as special as possible for this special cyber trading event. And so there you go. The link is on the screen, acornwealthcorp.com/cyber.
Well, so John, thank you so much for that.
Thank you so much, Fausto, for having me on the show.
It's always a pleasure, John. And listen, we got to get you back on the podcast. We had such a great dialogue that everyone was enjoying it. So, but thanks for sharing this promo. Everyone take them up on it, and hope everyone enjoyed the cyber.